Hey guys, welcome back to Crypto Serious. Let's do an update on Bitcoin's latest price action. On the daily chart, Bitcoin printed a big red candle yesterday, a full bearish engulfing candle that completely wiped out the previous three green candles. And on top of that, it happened right after a false breakout above resistance. So this combo, a fake breakout followed by a bearish engulfing, technically means the recent bullish move has likely come to an end. The last time we saw the same kind of setup was back on August 14th, when Bitcoin formed a daily bearish engulfing candle and then dropped nearly $11,000. So yeah, it's a pattern we've seen before, and it usually means a correction phase is starting. Now I know for a lot of bulls out there, that big daily red candle probably killed the mood instantly. But the question is, will Bitcoin just chop around here for a bit and maybe still make another push to a new high? Let's talk about that, because I found something interesting in the on-chain data that might give us a few clues. So today, we're going to look at things from both a chart-based and data-driven perspective, and I'll walk you through my personal trading plan and thought process for this setup. First, I want to talk about gold, because it's actually super relevant to Bitcoin's drop. When gold is trending strongly upward, it's often hard for Bitcoin to enter a deep correction. Why? Because, as Jerome Powell himself once said, Bitcoin's biggest competitor isn't the US dollar, it's gold. One's the real gold, the other's the digital gold. And right now, real gold has already ripped past $4,000, breaking its all-time high. If you look at gold's recent structure, it also had a fake breakout at the top, then went sideways for 3 whole months, June, July, August. And after that long accumulation, boom, an explosive bullish leg to new highs. So if Bitcoin is following a similar structure, then maybe, just maybe, it's still building something beneath the surface. All right, now let's go short term. This part's key. Yesterday, we talked about that trend line on the chart, and once it broke down, then pulled back and dropped again below the previous low, that was your textbook 1-2-3 reversal pattern completing its third leg. That's why, as soon as I saw that break, I told everyone to be ready for a deeper drop. The target? Around $122,000. That's where we had a horizontal base. And think about it. Most traders who went long above that zone probably had their stop losses sitting right under $122,000. Once that broke, the market flushed down, taking out almost all the recent long positions in one clean sweep. Now we're basically in a reaccumulation range, and the upper edge of that range sits near $122,250. If Bitcoin manages to break above that short-term resistance, we could easily see a retest of $123,400. You guys remember during that strong rally, I kept telling you to take profits step by step. At the top, I personally closed about half of my long position. I wasn't chasing FOMO longs at the top, and I'm also not FOMO shorting right now either. What I'm waiting for is a retracement setup, a clean pullback that aligns with the Fibonacci 0.618 level, around $124,000 region. If we do get a short-term bounce into that 123,300 to 124,000 zone, that's where I'll start watching closely for bearish confirmation and potential short setups. But if the market instead just grinds higher, kind of like the way stocks rallied hard after that fake breakdown, then we could still see Bitcoin form a new high before another fake breakout and deeper correction begin. Here's something we should talk about. Every single day in an uptrend like this, there are people stubbornly shorting. Remember the last few fake breakouts? Short here, stopped out. Short again, stopped out. Short again, stopped out. Then finally yesterday, they shorted and it actually worked, and now they feel smart again. But think about it. That's not strategy. That's just betting on luck every time. If the market really wants to trap those traders again, we might even see one more push up, one more perfect fake breakout, forming an M-top pattern before a true breakdown starts. So right now, I'm staying patient, watching if Bitcoin consolidates here, and then either breaks up above the red resistance line, or if it fails and rolls over again. If it rolls over, I'll focus on the $113,500 zone as a major support to watch. And if we ever see a daily candle reclaim the high of that big red candle, I'll treat it as a failed breakdown, meaning bulls are back in control. All right, let's talk a bit about Ethereum. From yesterday's high to today's low, Ethereum dropped about 7%, roughly 300 points, a pretty large correction. But does that destroy our previous bullish idea that Ethereum could still rally toward $5,000 after breaking out of its consolidation box? Not really. It just means the next buy zone might be a bit deeper. Right now, I still hold my long positions, but if it breaks below certain levels, I'll take the stop and re-enter lower. The next key support I'm watching is around $4,200, which lines up with a previous accumulation area, kind of like a golden pit formation. If you're flat and want to play it safe, you can wait for the 0.618 retracement, again around $4,200, to consider new longs. Of course, maybe Ethereum doesn't even drop that far. Maybe it just consolidates right here and pushes back up, which, honestly, I'd love to see, because I'm already holding some exposure myself. Anyway, that's my take for today. Thanks for watching, and I'll see you guys in the next update.